everyone will know the dollar is a failure and they'll exit the dollar. So the Fed can't win. Financial markets have a day of reckoning, and it's just ahead.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the Silver Guru, one of the top silver experts and founder of themorganreport.com. David, thank you so much for joining us today.
Elijah, always a pleasure. Thanks.
Well, today, Friday, we're recording this. We just got the new CPI data out. New high for CPI. Haven't seen this kind of inflation since 1981. The stock market is selling off, and gold and silver are rallying a bit. Your take on what this inflation number means and how it has rocked the markets?
Well, a little, diving into it. So 1% monthly is about 12% annualized. And I was there in 1981, a pretty young man. And the last number I remember that the government posted was 13%. So we're almost at that same number. And at that time, we the U.S. government, we tried many things to bring inflation back. They had these win buttons, whip inflation now under Gerald Ford. A lot of jawboning rhetoric, talking, but nothing really took place until Paul Volcker came into the Fed and basically pushed interest rates to unfathomable levels at that time. Coming back to now, that couldn't be done. You crash the economy. If you put the interest rates that high, the interest on the national debt would be the largest budget item. So they're between a rock and a hard place. The markets are reacting as they should, in my view, meaning that with uncertainty and all that's happening in the economy, the stock market, the financial markets are starting to reflect the real economy, which means that the value of them is far lower than it is right now. And I think they're going lower. Gold and silver are putting in a nice effort today. I think over the long term, it's almost a certainty, but there's people that have different ideas about risk on, risk off. But when we get to that point where people just continue to anticipate more inflation and they're willing to take that paycheck as soon as they get it and go out and buy real goods with it, that's a psychological event that cannot be stopped by the Fed or anybody else.
And a while back, you had really forecasted this move from stocks into commodities. Can you give us an update on where we are in all of that?
Well, I think it's a secular bull market. I think its duration is years. Could be wrong, but just for investment purposes only, even if you're going to buy copper and not use it for pipe or for wiring, just to own the copper is smarter than owning a treasury bill. And so that's part of the equation. But overall, going from stuff that we need now, commodities, versus stuff we really don't need, or just based on how much a company can produce of a good or a service. So we are in the real world again, meaning commodities, and we are exiting somewhat the financial markets, which is a lot of algorithmic trading between currencies, these debt swaps, these mortgages that have been modified into securities, and on it goes. I mean, the financial system is much larger than it needs to be. If it was run on a more ethical, simplified system where your average person could understand it without a bunch of computer interference running these high frequency trades, we'd have a different market. But that's not our reality. But nonetheless, nature's reality of the economy is going to rest upon the financial markets.
And one of the things that is obviously impacting the financial markets right now is the Fed. And you've actually said a lot of people have been expecting the Fed to pivot, to reverse, to possibly ease more instead of tighten. But you're on record of saying no, even though the stock market is seemingly crashing right now, and we're seeing high inflation, the Fed's priority is to take care of this inflation. So they're going to continue to raise rates. Can you expand on that?
Sure, that's partially true. I mean, I've certainly taken that position. But, I also have a weasel clause saying, they might pivot and come back the other way. I just read on one of the forums, I forget which one, I give it credit, that, Powell says, well, we have the tools to fight inflation. And this person was laughing at him, and rightfully so. However, going back to Volcker, if the Fed was strong enough to push interest rates up, not necessarily to 18% like Volcker did, but just keep ratcheting up, 50 basis points or 75 basis points. So go up, let's say, I'll make up a number, 3 or 4% from where we are now. Believe me, that would take care of the inflationary problem in the financial system, but it would devastate the economy. And Powell knows it. And, people like me that are independent or even mainstream know it as well. So most are anticipating that they'll give in and give in soon. I take the position we don't know yet. And the only way to bring it back really is to cause a lot of pain. And a lot of pain means we distrust the dollar enough to adjust prices where we can trust the dollar again. So what I just said is if interest rates are set really by the free market and people are in line with the risk and reward and the ability to pay off the notes, the T-notes, the T-bonds, the treasury bills, and people believe it because now they're discounted, we probably have the best solution, but it's the most painful solution and it's most unlikely to take place that way. What's more likely is what my peers think, and that is that the Fed will pivot and start lowering interest rates again. But from where? And they're really, really low still. So my conjecture is, as you said, they'll keep causing more pain. And they may go that 1 point too far, not necessarily a full interest rate of 1%, but reach that place where they've done more harm than good. And if that happens, and it's possible or probable, then they might pivot then, but by then it'll probably be too late. Because at that point, everyone will know the dollar is a failure and they'll exit the dollar. So the Fed can't win. Financial markets have a day of reckoning, and it's just ahead.
What does it look like when there is that move away from the dollar?
Well, first, there's a massive move into the dollar. And I've tried to emphasize that through, many of my, interviews and talks and lectures and everything else, because it is a reserve currency and most things are leveraged. So you don't have enough dollars to pay off your debt right now because you've borrowed. So you need more to pay off your loan. And so there'll be a big move in the dollars for some time, and then they'll quit working. In other words, you get your dollars, you discount your note, your T-bill or whatever. It could be a corporate bond, it could be a mortgage, it could be something. And you get the cash for it. But now what is that cash worth? The answer is, well, you're good to get it back. You're absolved from that obligation, but you're seeing food prices and gas prices continue to go up. So you'll see it move into hard assets, not necessarily gold and silver, although they'll be main beneficiaries of it. But you also see it, in the business world, paying off debt, consolidating, stocking warehouses again. You might see some people that can have durable goods that can stay on the shelf for a while, rent a warehouse and start stocking it up because they know if they buy now, and especially spare parts, that they are at an advantage over their competitors. So these times are going to be tough. We've been there before. Cycles repeat. We're in a major, major cycle, something that doesn't take place in my studied view for every 3 or 4 centuries. But we are fast approaching it. And I am also of the belief that, we'll come through it. And we'll probably come through it better after we get through it. But as we're going through it, there will be a lot of pain.
Now, sometimes I feel like we can kind of get caught up on how the markets are going to react to all this. And we're seeing how the markets are reacting, whether it's gold and silver or whether it's the stock market. But at the end of the day, those at least are supposed to just reflect what is happening in the economy and what is happening with supply of resources and all that. So if we kind of look at that, how is this going to impact the economy? How is this actually going to impact the average person in the U.S. going forward?
You're going to have a huge lowering of the standard of living. The standard of living from pretty much top down will be a lower standard of living. I mean, you will not have the options of buying everything that at the grocery store that you used to buy back in 2019. You will have less choices across the board. Automobiles, clothing, food, as I just mentioned. And so the standard of living will be lower and lower. And that's not the only way to measure standard of living, but I'm not going to get philosophical. But nonetheless, you'll see a large contraction across the board. So money doesn't really fix the problem. And that's one of the Fed's main issues is that all they can really do is change the money supply. So they can move it up and they can move it down. They can move it all around. They can move it to the next town. It doesn't matter. It's beyond the point where that will do anything. And once the market recognizes that, then we go into, wow, I could still exchange this stuff for something I need or want or can sell later at a higher price. I'm buying it now.
Now, when it comes to right now, what we're seeing, as we mentioned at the beginning of this interview, the inflation at a 40-year high again, do you see this getting worse? Because it seems like we're seeing oil prices rise again, which is a significant contributor to these high prices across the board.
Well, yeah, in a couple of ways. One, it could get worse if you have a major bank failure like a Deutsche Bank or Credit Suisse or SoGeneral, or any of them could be a U.S. bank. In fact, and they're all interconnected. So if, one bank goes down, it could possibly be rescued, but not necessarily. So that's one of the problems. The other one is, Japan holds the most debt outside of what the Fed does. And they're going to have to defend the yen. And to defend the yen, they're going to have to sell treasuries, which means it's going to put pressure on the market. If there's a lot of selling pressure, of course, it's going to affect the bond market and interest rates will be forced up because the amount of selling pressure from, let's say, Japan as an example. Another one would be what I've already said 3 times. It's just that the market will start to move in areas it feels the safest. And that's not necessarily just gold and silver. It could be utilities. It could be a lot of items, but it's more like what's really needed rather than what's really wanted. And there will continue to be innovations. There'll continue to be new businesses. Some of the best businesses started during the Great Depression. So people, the old expression, when the going gets tough, the tough get going. And I think that still applies. But we, the Americans, maybe North Americans, have not been tested on that meme for a very, very long time. I think on balance, on aggregate, on the whole, it will come through and we collectively will come through on it. But that doesn't mean there won't be a lot of disarray as we go through this.
You mentioned how there's going to be, a move into commodities and precious metals. Your perspective on where we are right now in gold and silver, it seems like in gold, we're seeing some strength, it seems like. But in silver, we're down around the lows of where we've been. We're pretty much at the lowest point we've been in the last 2 years.
Yeah, silver's been extremely disappointing. The more I've thought about it, and maybe it's my propensity to defend silver, be an apologist. I don't mean to be. But looking back at what happened in 2008, both gold and silver got crushed, silver especially, but they both bounced back. And when gold came from the bottom of the financial crisis, 2008, that's what the mainstream calls it, it's valid, it more than doubled, and silver went up over 500%. So they were going to see a similar scenario this time. It's just that we haven't got to that point where the gold and silver markets start to reflect the uncertainty in all the rest of the markets. What's going on in the bond market, stock market, we've already discussed. So I think we're away from that. A lot of my friends I've noticed and they do technical work as well as I do, but they're expecting rather short term a breakout. Could be. Hope they're right. From what I'm seeing, I think we're still going to have the summer doldrums. We're not going to go very far with the gold and silver market through probably the rest of the summer. Maybe in September, we might see some strength into the end of the year. No one's sure about these forecasts. I know the audience is mature enough to know that. But at some point, there will be the run to gold. And I believe the run to gold has already started. It just hasn't been shown in the price yet. But if you look at what the central banks are doing, particularly, what Russia and China have done for decades, you're looking at the balance sheet in some of these nation states that are buying more gold. And you see it more often in print in the mainstream press. So there's been kind of a subtle move to strengthen certain positions in gold, mostly on a nation state basis and on a retail basis. I mean, the Gold Eagle program, I think it set a record here a month ago or so. So there's a lot of people interested in wealth preservation, and that will continue and it will accelerate. Silver will lag gold, I think, this time. Could it take off on its own? Sure, could. Such a small market, but it's acting like a commodity only right now. It's not acting like a monetary metal. But I strongly think that it will, and it will play not only catch up to gold, it will surpass it, because as gold continues to strengthen, the price gets out of the means of a lot of people to buy it. For example, one gold Krugerrand is at $4,000, for example. A lot of people wouldn't put 4,000 into, a singular disc of gold, but they might put $400 into whatever that buy in the silver market. That's what we saw in the late 70s, early 80s with what took place in both silver and gold. And I think it'll happen again. But we have to remember that was with the Hunt brothers, a sheikh or two, and a pretty aware public from the U.S. But this time it's global. And the dollar will, as I said and to repeat, will be strong. I mean, a lot of people will be seeking dollars for some time. And then it comes to that point where even the dollar comes into question. And once that happens, and that psychology takes place, just taking place now, but it's not taking place in the financial markets. So let me be clear. The general public knows something's drastically wrong. They can't they can't really articulate it, but they know gas and food's going up, and they believe it's going to continue to do so. So they're already buying extra food or storing gas or whatever. The financial markets really haven't accepted that yet. They're still thinking that, with the Fed's right policy or whatever they think is immaterial. The reality is the markets have not reacted to the problem as much as it's going to in the future. So when that run to the dollar happens, because you've got to pay down debt or people are willing to settle for cash ASAP, and okay, I'll discount my car, car prices come down or whatever, just to get the cash. I mean, someone that wants to sell something in a hurry, if a normal used pickup truck's going for $20,000 and you want out and you put it at $18,000, you're going to sell it, as long as assuming it's equivalent to everything else that's in the marketplace. So my point being is when people get desperate, things start to happen, and it can be a desperate situation on a personal level, a corporate level, and a government level, and it is.
You've recently talked about on your YouTube channel how really, the whole reason this is happening, right? If we go back to the fundamentals, why we're seeing this inflation is that we're on a paper monetary system. We're on a fiat monetary system instead of having sound money. And you've talked a lot about this and how actually there are encouraging movements out there to bring back gold and silver as money. And, we're seeing some states repeal their laws with respect to sales tax on precious metals. And we are seeing even some states legalizing gold and silver as money. So can you share with the viewers some updates on this, some positive movements we're seeing out there towards sound money?
Well, I think you said it all, Elijah. I mean, it's something that I think it's a sound money. I forget the exact website. My friend Stefan Gleason heads it. But the idea of having a dollar be worth $1 for now into the long-term future is really a great concept, because if you have a sound money system, then you take a lot of stress off people, because they know whatever money they put in the bank will be as valuable, 10 years, 20 years, 30 years, 40 years when they retire as it is the day they save it. And that's a sound money system. And of course, to be fair, there's been problems with the gold standard and a problem with bimetallic standards. And yes, if you make a big gold discovery, it does inflate the money supply because if gold is money. I get all that. And I think it's important to understand that. But I think on the long-term basis, there's a reason that gold and money, or what some people call God's money, have existed for thousands of years. And you can't name one fiat that's done that. So the dollar will go into the dustbin of history just like the rest of them. What will take its place remains to be determined. I think in the interim, it's beholden on anyone that can think this through of their own accord to have some precious metals. But, if you have a choice between, food and silver, I'd tell you to buy the food. But if you have the food and you have excess savings, I would consider not keeping it all in the bank. You need some for bills, obviously, but putting some into precious metals.
All right. Well, David Morgan, we really appreciate your time today. Before we let you go, did you have any last thoughts for our viewers, and where can they find you?
They can find me at themorganreport.com. Please do get on our free email list, because I do get shadow banned, and some of the videos I get do not get uploaded due to the fact that they're politically incorrect. But and then there's a subscribe button. You can look at that. I'm redoing my LinkedIn page for whatever that's worth. And I just really want to let people know I do a lot for the public service, and that's on the blog. So if you go to morganreport.com and hit the blog feature, it will pull up interviews like this, Elijah, and thank you for having me back. And it's just, I feel part of my calling to do my best. And I'm one of many, certainly a lot of us out there. They're calling them as we see them. We're not beholden to any political organization or group or political party or anything else. We get to speak up till now pretty freely on what we think and what's important. And there's much more things important than money, but money is important. And when they destroy the money, they can destroy the society. And unfortunately, they've destroyed the money. And looks what's, we're witnessing the results now.
All right. Well, it'll be very interesting to continue to track this. David, thank you so much for your time, and God bless.
God bless you. Thank you, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.